Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Sorry for having to do this feature today. I actually have as you may have seen few weeks ago, my computer was down, so pretty much actually working on my hard drive. It was starting to crash. I need to replace it. So apologize for the format today. Hopefully, I'll have it back tomorrow, and we'll go from here. Today is Tuesday, November 23rd, and we got some pretty big information today. Yesterday we didn't really have any economic releases. Today we do, and tomorrow we'll have some pretty big news as well. So the big news today is we got the second estimate, which will be a total of three estimates of the GDP, the gross domestic product. Came in a little bit higher than what the consensus was, and the prior was at 2%. So it jumped up to 2.5 for the third quarter GDP, which is good, pleasant surprise, but it's not enough to really get us out of this doldrum with the high unemployment. To get us out of high unemployment, we need somewhere probably around 6 to 8% to really kind of in consecutive quarters to really kind of show any real growth to help bring that down a bit. So we really need the economy really moving a lot more than what it currently is. The deflator is actually it came in on expectations at 2.3%, and then existing homes came down a little bit, but where the estimates were, we were expecting to come down a little bit. So 4.43 million here. Later today, we're going to see the Fed minutes coming out, and that could really change up the market here quite a bit. Uh, so that this can give the minutes. So it'll kind of let us know who was dissenting from the last vote, what was being said between between the chairman and the rest of the board. So that will be played out later this afternoon. So expect some volatility as to what could be, what could be said, what could come out in their meeting. Also in the news, we had the North and South Korea having some issues going ahead, where North Korea fired some missiles at a island that's disputed, a land between North and South Korea, killed a couple of Marines, injured a few more, as well as some civilians. As a result, South Korea, of course, fired back at North Korea, so we got a little bit conflict there, geopolitical. So, and on top of it, we have Ireland also, Prime Minister trying to sell the issue of the bond with agreement with the rest of the EU on the bailout they're receiving. Remember, this is going to be just the tip of the iceberg. We got Spain and Portugal that's going to be coming up as well. That's going to be very important as well. So all those aren't so good for the stock market. Stock market's actually down quite a bit, but as a result, bond market is looking better, much better, because most of those geopolitical issues are kind of creating a flight to safety for pulling money out of the stock market, putting it into the bond market. So that's actually helping out the bond market. Another uh, item that came into the news was there's a FBI raid that happened this week regards to possible insider trading that's going on. So there's a big federal investigation that's going on in regards to some large hedge fund companies that are being accused or being investigated for insider trading. So that's another thing that's kind of spooking traders at the moment. So let's take a look at the bond market here, and we'll kind of see where we're at. We had a nice jump in the first day here. We had went up a little bit. We were kind of within that range yesterday, the support and the resistance. But today we jumped up about actually 38 basis points where we left off yesterday, uh, from yesterday, and now we're down about 13 basis points. So we're kind of almost touching that 10-day moving average, but we are down, was three now. It looks like it's down about 13 basis points. So for the day. So again, still pretty good. We're up about at least 20, 25 basis points from yesterday. So we'll have an improvement in the mortgage rates. That's good. Should be good news. So I don't know if we'll reach these levels we had before. The correction level will probably be right about where we're at now, or a little bit high, maybe slightly higher, where the 10-day moving average is. So I wouldn't expect too much more than this. You know, again, so if you're sitting on the fence, now's the time. So you guys have a great day. Have a wonderful weekend, and I'll catch you guys tomorrow.